أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. إن ربكم الله الذي خلق السماوات والأرض في 6 أيام ثم استوى على العرش يغشي الليل النهار يطلبه حثيثا والشمس والقمر والنجوم مسخرات بأمره ألا له الخلق والأمر تبارك الله رب العالمين. ادعوا ربكم تضرعا وخفيا إنه لا يحب المعتدين. ولا تفسدوا في الأرض بعد إصلاحها وادعوه خوفا وطمعا إن رحمة الله قريب من المحسنين. وهو الذي يرسل الرياح نشرا بين يدي رحمته حتى إذا أقلت سحابا ثقالا سقناه لبلد ميت فأنزلنا به الماء فأخرجنا به من كل الثمرات كذلك نخرج الموتى لعلكم تذكرون. صدق الله مولانا العظيم.
Thank you very much to our Qari for this excellent recitation. His Excellency Mansur Muhtar, Vice President Operations IDB, Mr. Metin Özdemir, CEO of Ziraat Participation Bank and Chairman of ATFIMI, Mr. I am Nuri Birtek, Secretary General of ATFIMI, and I will be the MC for this seminar. At the outset, allow me to thank IDB and Government of Tunisia for the excellent facilities and hospitality extended to us in this beautiful city of Tunis. I'm also thankful to speakers as well as to participants for their presence and interest in the seminar. As I have in my initial remarks made it clear that we have 3 distinguished co-chairs. They are His Excellency Mansur Muhtar, Mr. Metin Özdemir, and Mr. Nabil El-Medeni. They will make some short welcoming remarks. And I will first like to invite His Excellency Mansur Muhtar to make his remarks. As you all know, Mr. Muhtar has a very brilliant career. Prior to joining the IDB, he has served as Executive Director on board of the World Bank Group 2011-2014, as well as co-chair of the United Nations Intergovernmental Committee of Experts on Sustainable Development Finance 2013 to 2014. He has been the Minister of Finance of Federal Republic of Nigeria and chairman of the National Economic Management Team at a very crucial time of the global financial crisis, that is between 2008 and 2010. He was executive director at our African Development Bank and Director General of Nigeria's Debt Management Office. Mr. Mukhtar holds a doctorate degree in economics from the University of Sussex, UK, and master's degree in the economics and politics of development from University of Cambridge, UK. I would like to invite His Excellency to make his welcoming remarks on behalf of IDB. Let me remind you that His Excellency has to leave immediately after his welcoming remarks. Your Excellency.
Mr. Martin Ozdemedir, Chairman at FIMI, the DMD for Bank Zituna, distinguished delegates, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. It gives me a great pleasure to be here for this IDB at FIMI Bank Zituna and Zituna Tamkim joint CEO seminar on FinTech, RegTech, and development finance. And I'm truly honored to be given this opportunity to deliver the opening remarks here. I would like to start by thanking our partners at FIMI, Bank Zituna, and Zituna Tamkim for organizing this very timely seminar, addressing an issue of topical importance. We live today in a very exciting and challenging age, the fourth industrial revolution, a revolution that is technology-driven, a revolution that is fundamentally and irreversibly changing the way we live, the way we work, and the way we relate to one another. Technology has already disrupted and created new business models and paradigms. Driverless cars, hyperloop travel, 3D printing, and artificial intelligence are all very topical subjects of discussion today, among other issues. And they provide a glimpse of what the future promises. A future that will be shaped by changes occurring at exponential rate. These changes bring with them a unique set of opportunities, but also challenges. Today, billions of people have access to the internet, which provides unprecedented access to information and knowledge. Technological revolution facilitates access to markets, finance, and other resources. This revolution has also demonstrates the potential for raising incomes, reducing poverty, and improving the quality of life in a manner that has not been thought of in the past. However, conversely, it can also increase the vulnerability and exposure of those who are unable to harness these changes to their benefit. Therefore, it is critical that technology as a tool should be developed and regulated in a manner that maximizes benefit for all rather than a few. How this will be achieved remains to be determined. One thing is clear, however, the response to it must be coherent, integrated, and comprehensive, and should involve diverse stakeholders. Distinguished ladies and gentlemen, the Islamic Development Bank has the mandate to alleviate poverty and assist its member countries in achieving their goals of socio-economic development in a sustainable manner. Access to finance remains at the core of our business. Naturally, we are greatly interested in FinTech and the possibilities it offers for financial inclusion through cheaper, efficient, and accessible financial services. The fast pace at which FinTech has been evolving holds great promise for development. From lending, capital raising, and payment systems, FinTech has now expanded to include international money transfers, wealth management, insurance, and blockchain technologies. The possibilities in terms of products and applications are limitless. The IDB is also involved in supporting the development of an enabling environment for finance. This includes legal, regulatory, and supervisory regimes. And with the emergence of FinTech, regulating new players and services also becomes a challenge for everyone. The spread of disruptive financial technologies means that regulators need to continually evolve to support its evolution in a manner that ensures compliance, financial stability, and benefit for all. Just as FinTech reduces the time and cost involved in financial transactions, RegTech minimizes the time and operational costs of implementing, monitoring, and meeting both compliance and regulatory standards. Another key pillar of IDB's strategy is its focus on Islamic finance. The Islamic finance industry is expected to reach between 3 to 4.3 trillion US dollars by 2020. And given the demographic structure of most developing countries, their developmental and infrastructure needs, this market is set to grow in the near future. The coupling of Islamic finance with FinTech and RegTech offers a completely new set of possibilities for financial inclusion and for access to finance. In this context, the IDB is planning to start a FinTech development program, which is expected to further foster the rate of growth of the Islamic financial sector. Furthermore, IDB also recently organized the FinTech Islamic Finance Challenge that focused on exploring innovative financial technologies in Islamic finance, targeting the underserved communities in OIC countries. Distinguished delegates, ladies and gentlemen, let me conclude by thanking you once again for this great initiative. I hope that the deliberations here today will pave the way for directing our efforts very much.
We are grateful to His Excellency for this brilliant introductory remarks. I now would like to invite Mr. Metin Özdemir, Chairman of ATFIMI and CEO of Ziraat Islamic Bank, to make his welcoming remarks. He worked for Kuwait Finance House as board member of Ziraat Bank, the largest bank in Turkey, before becoming CEO of Ziraat Islamic Bank. He has also served as a member of Istanbul Municipality Parliament for 10 years. Mr. Özdemir.
Thank you very much, His Excellency Mansur Muhtar, Vice President, Operation IDB, and Mr. Nabil El-Medini, Deputy Managing Director of Bank Zeytuna, and distinguished participants, sisters and brothers. Assalamu alaikum wa rahmatullahi wa barakatuh, and a very good day to you all. I am infinitely grateful to Allah Almighty for being in this beautiful city of Tunis and Tunisia. My thanks and appreciation go to IDB and government of Tunisia of the excellent arrangement made for the 43rd annual meeting of the IDB group. Allow me to say a few words about ATFIMI for the benefit of those who have not yet been acquainted with ATFIMI. Established in 1986, ATFIMI, Association of National Development Finance Institutions in member countries of Islamic Development Bank, is an international non-profit association serving around 45 members in 18 countries, with headquarters in Istanbul. The main objective of ATFIMI is to establish a networking and solidarity among its members and capacity building of its member institutions. In this context, ATFIMI organizes seminars, workshops, conferences for its members in various cities in its region. Its most recent activities include a regional workshop on understanding fintech in Islamic finance held in Istanbul, Turkey on 20-21 February 2018. A seminar on risk management in Islamic banking held in Tunis on 14-15 November 2017, jointly with RT. An international CEO forum on sustaining economic growth with social consensus modalities of the new era, Kuala Lumpur, Malaysia on 24-26 October 2017, jointly with the two peer organizations. I especially invite Tunisian NDFIs to join ATFIMI and share their experience and know-how with other members. Coming back to our event, ATFIMI organized a CEO seminar jointly with IDB for the benefit of National Development Finance institutions of IDB members countries every year on the occasion of IDB Group's annual meeting. The objective of this year's seminar is to review the recent developments and future prospects in fintech with special reference to development finance such as crowdfunding, financial inclusion and Islamic finance. It also aims at informing NDFIs on the present global practices of fintech regulation, regtech, as well as its future prospects in order to minimize fraud, anti-money laundering, and other issues. The role of regtech on compliance issues will also be addressed. I would like to thank Bank Zeytuna and Zeytuna Temkin as the joint organizers of the seminar. I am grateful to all the speakers for being with us today, and we are sincerely also very grateful to IDB for providing the meeting hall and facilities for this program. Wish you all a beneficial seminar. May Allah Almighty bless us all. Thank you very much.
Thank you, Mr. Chairman. Now I would like to invite Mr. Nabil Al-Madani, Deputy Managing Director at Bank Zeytuna. Zeytuna Bank is one of the host institutions. Mr. Madani joined Bank Zeytuna in 2010 after serving 19 years with At-Tijari Bank as Central Director of Foreign Banking Operations. His expertise is on audit inspection, regulatory compliance, and commercial development. He has served as CEO of Tunisian Post. He is also a member of Board of Directors of Tunisian Telecom. The floor is yours, Mr. Nabil Madani.
Merci beaucoup, Monsieur le Président. Bonjour à tout le monde. Monsieur Meten, Chairman of ATFIMI, chers invités, nous sommes tout d'abord très honorés et c'est un honneur auquel nous sommes extrêmement sensibles d'assister aujourd'hui avec vous, avec la BID, avec l'ATFIMI, pour parler un tout petit peu des FinTech. Je laisserai peut-être l'occasion à mon collègue, M. Jamel Bouzayen, pour parler et d'approfondir le raisonnement sur ce domaine-là. Moi, je profiterai peut-être pour vous présenter Banque Zeytuna. Banque Zeytuna, c'est une banque jeune créée en 2010, elle a démarré en 2010, mais elle a obtenu son agrément depuis 2009. Et certainement, l'idée a commencé à germer bien avant 2009. Elle a obtenu son agrément comme une banque universelle commerciale sur la place de Tunis, mais elle a choisi de se spécialiser dans une offre spécifique qui est conforme Sharia compliant. La Banque Zitouna, c'est une banque innovante, jeune. D'ailleurs, la moyenne d'âge de son capital humain, elle est de 33 ans. Certainement, Monsieur le Président, je la biaise en quelque sorte, parce que certainement, elle est moins que 33 ans, mais aujourd'hui, c'est la jeunesse de l'esprit, c'est la jeunesse de la vie, c'est la jeunesse des FinTech qui vous parle. Dès le départ, Banque Zitouna a choisi la voie, elle a bien compris que l'avenir, c'est dans les FinTech. Certainement, elle a investi dans son système d'information, le cœur de métier, mais aussi dans tous les aspects bancaires. C'est une banque de proximité, mais elle a fait un mixage entre la proximité ancienne, qui était la proximité physique, c'est-à-dire l'ouverture des agences, et la proximité à distance. D'ailleurs, nous avons opéré un petit changement sur les paroles de l'une des célèbres chansons de Demis Roussos. Auparavant, il chantait « Loin des yeux, loin du cœur ». Aujourd'hui, nous pouvons être loin des yeux, mais proches du cœur. Nous pouvons l'être avec toute cette nouvelle technologie à distance. Donc, dès le départ, la Banque Zitouna a investi sur la monétique, sur tout ce qui est mobile banking, tout ce qui est communication à distance avec notre clientèle. Auparavant, lorsqu'on parlait de la finance islamique, on dit que c'est une finance traditionnelle peut-être. C'est une finance qui ne pourrait pas répondre aisément à l'ensemble des besoins de la clientèle. Eh bien, sur la place de Tunis, nous avons prouvé le contraire. Tout d'abord, nous avons prouvé que la finance islamique peut aisément répondre à l'ensemble des besoins de la clientèle, qu'elle soit des clientèles de la particulier, professionnelle, la petite et moyenne entreprise, la grande entreprise et même le groupe d'entreprises. Mais nous avons aussi fait preuve que nous sommes une banque innovante. Nous avons utilisé l'ensemble des services qui pourraient rendre la vie aisée à notre clientèle. Aujourd'hui, si Jamel Bouzayen, je vais vous passer par la suite la parole, là, donc il va nous présenter dans les détails, certainement les plus fins, la situation des FinTech ici sur la place de Tunis, mais aussi nous ferons un focus sur tout ce qui se passe au niveau de Banque Zitouna. J'aurai tout le plaisir par la suite à répondre à vos éventuelles questions concernant Banque Zitouna. Je tiens à vous remercier pour votre attention et pour votre qualité d'écoute et à tout à l'heure, Inch'Allah. Merci beaucoup.
I thank Mr. Nabil Al-Medini for this very brief introduction to Banque Zitouna and his welcoming remarks. We now move to our seminar. We have 4 distinguished speakers, as you can see from the flyer. I will introduce them one by one. In order to save time, I'll try to be very brief. The first speaker is Professor Dr. Dirk Zetsche from University of Luxembourg. He has several degrees from many distinguished universities in Germany, Canada, Luxembourg, Liechtenstein. He has 2 PhDs and has served as advisor to and participated in expert working groups initiated by public institutions such as Financial Stability Board, the European Commission, the European Parliament, and European Securities and Market Authority, as well as Ministries of Justice of Germany and Liechtenstein. He has more than 200 publications to his credit, especially on FinTech, corporate governance, institutional banking, law, secure transactions, and international financial regulation. His latest publications deal with FinTech and inclusive finance, regulating a revolution from regulatory sandbox to smart regulation. He has so many publications, so I stop here. So I invite Professor Zetche to deliver his presentation. Thank you.
Good evening, ladies and gentlemen. I still hope the gentleman who's directing my slides will be in the room in a minute. Can someone call this gentleman, please? Okay. So, ladies and gentlemen, my name is Dirk Zetsche. I was introduced already so kindly by Mr. Nuri Birtek. It's a great honor to be here. It's a great honor to be among so many people that are so distinguished in experience in the things I just write about. You do it, and I hope that maybe some of the things that I can link together will provide you with the opportunity to get some inspiration. Because the job of a researcher, in contrast to a practitioner, is to assemble knowledge, to analyze knowledge, and maybe make proposals how to develop knowledge further. Let me just start about my institution. My institution is a chair specifically devoted to financial law and inclusive finance. It is set up itself by a development organization, by a foundation in Luxembourg that specifically focus on how to include all parts of society into the financial system, with the belief that we are promoting not only the health of the present generation, but also the future. Sorry, could you move forward, please? Or how do we do this now? Okay, so you see our chair has many different foci. As a lawyer, I believe in social ordering. That is maybe a bit different to the experience that we have in some of the societies where financial inclusion matters most, but experience shows that if social ordering is good, it usually brings transaction costs down, and here economists and lawyers are basically on the same turf. Law is one way to bring transaction costs down, and that may explain why a lawyer like me focuses on financial inclusion. Next slide, please. You see, our chair has many different projects. We focus in particular, of course, on digital financial services, but also on hedging solutions, because we found that one of the major atrocities in microfinance is to lend in hard currency and then refinance in soft currency. But we also deal with investment vehicles that try to channel money there. You see, the whole peninsula of microfinance and inclusive finance is in our purview. Next slide, please. Our topic today is financial inclusion and digital financial services. Probably both of these terms have many meanings. I try to have a very simple meaning today, just to include all parts of society without discrimination. And this last part is underemphasized, as I will show in my presentation today. There are lots of activities, and some of the experts who contributed to these activities are in the room. So please, if I'm inaccurate in some respects, please correct me immediately so we can have a fruitful discussion about these things. Next slide, please. Okay, my presentation will have 5 chapters. First, I will quickly introduce you to the TechFin and FinTech universe. That is basically the technologies that currently change the world. The next step will be how RegTech plays together with FinTech, and we already heard from His Excellency some of the implications of RegTech. Then we will look quickly at what financial inclusion will do in this type of FinTech, RegTech environment, and then we will discuss some direct steps towards such an ecosystem and what regulator and financial development institutions like here in the room can do. Next slide, please. Next slide. All right. FinTech has many buzzwords, and most people who deal with FinTech have only a slight knowledge of 1 or 2 or 3 of them. But all together make the FinTech multiverse that has changed the world. Of course, when I speak about big data, some of you have an idea what big data means. It means when you open a shopping website on the internet that you get offers that you have never asked for. Yeah? This is the linkage of data. But we have also other devices that change the world, in particular blockchain. Blockchain or distributed ledger is a means how we can avoid that data can be changed after they have been stored, so we can address the manipulation issue with data. Then we have e-identity solutions. We have also covered the problem that we get all this data but don't know what is in it with big data analytics. And all of these things together enable new business models. Many of these business models have basically made just minor contributions but big potential. So when we, for instance, address crowdfunding, crowdfunding is still, when we look at the numbers of the world, a small phenomenon, but it has big potential because it allows the disintermediation of certain financial institutions, and we all know that sometimes financial institutions can be unstable, so we can bypass them, and that solves one pain point in the financial system. Or another issue that we have to address is usually how basically clients, customers get the right product. When we could put all the type of individual preferences in our algorithms, then all of a sudden we don't need a bank clerk anymore because the computer can do this better and more reliable. He's neither tired and nor sick. Yeah, so that is usually after we have done the initial investment, it's a cheaper solution than human capital. And that's sorry, of course, for the people who work there, but maybe could be good for society. Next slide, please. Once we start understanding that the FinTech multiverse is not just one technology, it is not one thing, but a development on many ends, all of these developments play together. And that's, of course, a huge challenge for the regulators, because the regulator has usually access just to a small tip of the iceberg. Yeah, it may see a handful of new developments, but doesn't know what's going on outside the regulated sphere, and all the laws I'm aware of are usually not catch-all laws. I'm not aware of any law in the world that says every data processing is subject to licensing, and because that's not the case, there's so many innovations just hitting the regulators, and if one of these innovations goes wrong, the financial system will suffer. Let me give you a very, very clear example. When you look at the major banks of the world, they all apply risk management. Risk management is a necessity, but in many of these institutions, it is fully digital. Let's just assume that one of these risk models is wrong. If we now know that basically these risk models have just 3 different data feeds, let's just assume that these data feeds have a problem, that at the same time all financial institutions in the world will have no risk management anymore. Yeah? It is basically we create new risk. It's not just that we solve problems, but we're also creating new risk, and it's the awareness of politicians and regulators and everyone involved in the well-being of people that when we speak about FinTech, we are speaking not about the brave new world, we're speaking about exchanging one type of risk for another. Of course, hopefully it gets better, yeah? Because the same happened when we moved from the horse to the car. Yeah, we exchanged the risk that the horse was sick with the risk that the car runs down people and that the car basically breaks down too. Yeah? So it is nothing new that innovation is just an exchange of risk. It's just something that needs to be rested in the mindset of everyone involved with it. Next slide, please. Of course, the most famous example and most ambitious project so far was the famous India stack, where all of this was basically starting in 2009 with a kind of bottom-up approach. Yeah? First, we give everyone a digital identity, then we connect this identity, then we make things mandatory to use, then we abolish hard currency for some time to make it even more attractive to be digital. Yeah? And all of this, of course, was a very ambitious project, but it has started, as I just said, 17 years ago. ago, and it was basically characterized by some very continuous leadership. And I will also show you that maybe these ambitions were not always doing good, in particular not for the part of people that we are caring about, those, the poorest part of society, because those suffered the most, because they were not only excluded from finance, but also from the technology that's necessary to be in the finance sphere as well. Next slide, please. When you look at it, there's a balance of it. Of course, we have huge potential, huge opportunities. And these opportunities come from the fact that we erase the middleman. Middlemen are costly, we all know it. Yeah? Sometimes they are more costly, sometimes they're less costly, but they're always costly. Yeah? And when we exclude the middleman, middlewoman out of the value chain, we can bring costs down. At the next time, please, next slide. You need to stay there now because I have 40 more slides. So the other thing is, of course, it's not only opportunity, it is also a challenge. And those challenges have different words. Everyone who's involved with mobile money services in Africa know that interoperability is a huge issue, but that's not the only one. Yeah? We have cybersecurity as a huge risk. When all data is stored, every kind of rogue hacker can go into it, and knowledge is power, so we can turn it against the societies we're talking about. Yeah? I don't want to mention North Korea, but of course they're one of the usual suspects mentioned here. Yeah? And then we have many, many other complexities in our value chain that derive from the simple fact that we have technology, not the least of it that most regulators are either economists or lawyers so far, yeah? And not IT scientists. But from now on, they need to know at least what science can do to them. They don't have to be scientists, but they have to understand what science can do. And that is, of course, a new mindset. It's more academic-like. In the past, it was ex post regulation. When I see some fraudster running away with money, I send the police and kind of remedy the situation from the ex post situation. Here, I think we must look more ex ante. We must act in the state of, ignorance, in a way, using a very famous word. Yeah, we're acting in the state of ignorance. We don't know what risks will show on the horizon, but we know that there are risks. Yeah? And this is, of course, a new mindset where regulators will operate in. Next slide, please. When we deal with these type of risks, one thing has been acknowledged in the fintech sphere. We have 3 stages of acting. We have the stage where everything is just too small to care. When there are just a few 100 clients, the amount is low, there's no systemic implication, why shall we act? Let's just further innovation in that sphere, let them operate, let's make sure that fraud cannot happen, but other than fraud prevention, there's not a lot of things we should care about. But there's a stage when things get too large to ignore, when a significant part of society is involved, when there are a lot of regulated entities linked to this technology, and so that this kind of technology becomes crucial. Or when we have learned that things can develop so fast from this type of small to large state. And there's this famous Chinese example, I'm not sure whether you're aware of it, but when basically the shopping platform Alibaba started to store the money that was given to them by their clients for 1 or 2 days on a separate bank account, overnight they became the 4th largest money market fund in the world, and today they're the largest. Yeah? They have beaten the US Treasury bond fund, which is almost 100 years old, in collecting money just within 2 years. Yeah? And that shows that sometimes things get from too small to care to too large to ignore in a so shockingly fast time frame, because technology today doesn't need people to collect money anymore. It just does it by virtue of technology. And this is the type of state of ignorance I'm referring to. Next slide, please. Next. When we speak about this state of risk, we need to think about the solution. And the solution has been expressed. I just cited here a nice statement from a bank governor who just said, wouldn't it be ideal to be like in a Starship Enterprise state, where we just have a few buttons to push, and then risk goes up, risk goes down, interest rate go up, go down, clients purchase more or less securities. Yeah? So like this type of giant wheel, wouldn't that be the ideal state? And the answer is yes. Of course, we still need to solve who's Captain Kirk in this case. Yeah, we have some trouble here, yeah, because we all know we don't like the US president to do it, so who else just do it? Yeah, there will be a lot of problem. But next slide. Once we start thinking about this, we need to see that RegTech may be the answer to our troubles. If we know more about it, we can direct it. And here you see that FinTech was a bigger buzzword before the answer came up, which is RegTech. And today we are speaking about this sudden growth of RegTech in addition to inclusive finance. When we look at it, RegTech is nothing new. Banks always use technology, financial institutions always do it, and the first technology is the abacus. If I'm correct, it's invented in these regions, and the abacus was basically a fantastic technology around 2,000 years ago or 3,000 years ago to do the math simpler. Today, of course, we have seen many waves of technology. So what is new about our RegTech? Well, the difference is it is not meant anymore only to make the business more profitable. It is also designed to curtail risk. And this is a mutual endeavor. And it was already mentioned by our distinguished introductory commenters here. We had that it is an interoperational thing between the institutions and the regulators to make the risk more secure, better controlled in this world where everything's possible. Next slide. The point here, of course, is when we start thinking about what RegTech could do, we need to know what it is. First of all, it could just be a technical handle of risk measures. It could also be a more sophisticated way to make decisions. When I know better what type of clients are in default, maybe I can give less credit to them and more credit to others, or more finance to them, to others, or in a different form. Maybe they don't need just finance, maybe they need finance plus, finance and education. And this is where microfinance plays a big role. We know that about 30% of the microfinance institutions in the world are also business consultants. And that for a good reason, because their part of the clients are the least educated, those with the lowest degree of financial literacy. And for them, maybe a bookkeeping course is as important as a course in banking. Yeah? So we start from a different angle here, and maybe this is also something where RegTech can help, because RegTech can also educate. We can give them an online course at low cost, if they have a computer, of course. That's a precondition that we have to solve. We have, but also not just on the side of the entities, but also on the regulator, we have this development. When we have more data, we can better watch the system, we can better make decisions. Let me give you a specific example. You all know that we have a so-called interest rate dilemma in many countries of the world. And now I'm speaking in front of an Islamic audience. Nevertheless, you know that we have something like a de facto interest rate, even if we don't charge interest in this environment. And there's a huge discussion about setting the right level of interest so that the financial institution can survive and at the same time the clients can prosper. And here, of course, RegTech can help. If we have the better data from the ground, we know what type of profit we can allocate to the institutions and still at the same time allow the clients to run their SME business, to start and develop on their own. Examples, of course, more sophisticated include digital KYC tools and others. Again, it is a dream to have this one-stop shop. No one has it so far on the planet, and we are very closely watching this development, but many work on small solutions. And I will give you a few examples about that. But be aware of something. It is not just developing what you have further. It is not just making an update to the legacy system. Building a RegTech system is something entirely different. It is a full start from scratch because you need the data. And the data have been so far collected maybe by Excel sheets, by something like that. In the future, they will come in a very automated way, and handling with that requires a certain data analytics tool. When you look, next one. When you look at the potential is huge. It is cost reduction. It is better control, better risk control, better decision making. This sounds really like a good world. But when you look at how these numbers are calculated, then you really see what's going on. For instance, we know that the Know Your Client tools in Asia, in some Asian countries alone, are $1.5 billion per year. That is some money, but it's even more drastic when you look at the fines. Yeah? Since the global financial crisis, banks were hit with fines in excess of $320 billion. That is really a big money. When we could save that money and give it to the people, that would be a huge push for the economy of most people involved. Of course, you can say, no, it's only the big internationals. That's not true. When you look at why they got these fines, usually because they were active beyond their own country. Yeah? So, for instance, we have a huge number of fines being imposed because of business activity with links to Iran. Yeah? So the point is just, it is not just the West creating these fines. It's a whole world being connected together in a global financial system, and here is, of course, a huge potential with better controls to do that. And when you look at these figures, 15 to 20% operational cost that can be replaced by RegTech solutions, 15 to 20% of your staff costs just chopped. Wouldn't that be great for your profitability? And wouldn't that also free a lot of capital? Wouldn't that also make sure that the economy can flourish and people can create jobs with that money? That's, of course, the RegTech dream. Next slide, please. The point is, who is driving this? Of course, we have always these tech entrepreneurs, but usually they're spontaneous and they're egotistic. They cannot be the players who do it long term. I believe that the true players here are the regulators, because they can link all the dots. They can allow certain types of businesses and forbid others. That's always the law maker's role, yeah, to bring the black sheep out of the herd and make sure that only those who have clean hands, who have a good standing, survive, and because they keep the financial system afloat. And when you look at the entrepreneurs, you always need to look what type of role they have. Are there entrepreneurs that want to disrupt, like crowdfunding platforms? Are there collaborators? And these are usually collaborators. It's quite interesting. Most people don't want to disrupt because disruption is burdensome and no one buys you when you are unsuccessful. But as a collaborator, usually it's a less risky environment, and most fintech developments have in the collaboration stage. But here, the role of regulators is crucial. When we also look at simple examples, is that we can detect stuff that hasn't been detected before. Here is an example from a stock price development in front of a current change notice, and you see that volatility rises quickly before this announcement, and that means that someone had the information, someone was engaged in insider trading, and that is against fraud against all the other investors, and as such, this can be detected today very simply. This is normal market practice already in the large capital markets of the world. Another example is, of course, the India stack. I addressed it, so I will keep it short. But here, the true potential lies in the timing. Transactions will shrink to a very small part of what they lasted in India before. The problem with India is, of course, did they do too much in a short time? And remember, it was 17 years already. Okay, next slide. You will see this is a GDP development, and I just highlighted what happened after the demonetization. Yeah, so 17 years of development, and then quickly after last slide, please. After the demonetization, you see that there's a true gap. It was approximately 2% GDP that this demonetization caused. And when you look in the data, and I worked together with an Indian scholar, this growth that is lacking stemmed from the fact that people who didn't have access to digital finance could not spend any money anymore, and they suffered severe times for quite some time. Next slide. A different example, how it works in Europe. That's quite interesting, because Europe has initiated something like RegTech, but entirely different than many other countries. The reason is they have a legacy system of many banks that have already reported stuff. So what they started out is, rather than dealing with digital identity and so on, they just stressed the importance of reporting. So the only thing that they ask is, give us more data. And there it started, so they have no digital reporting, digital analytics among the regulators, but have not implemented an EID system and so on, but that may be due to the fact that they were already having some advanced legislation. And then when you see it, the red stuff is missing, the blue stuff is existing and working quite well. that is an alternative way to do it when you have already a banking system that's developed, because the banks cannot throw out their IT overnight. Yeah? So you need to do it in a different way, and that's maybe a way how to do it. You see that in Europe today we have a full market-based reporting. Every transaction is reported, but it's not basically an internal governance impact on the banks. It's primarily now between regulator and banks, and that required merely an interface and a reporting tool. Next slide. And the result is you have thousands of reports now on everything, and of course they hope that by announcing all these results, there will be a backward impact on the intermediaries, and now they're working backward towards an EID. They have already a legal entity identifier, and now they have a transaction identifier. So they work backward. Yeah? So it's the opposite of India, and that may be an alternative way to adopt things in an already working environment. Yeah? Next slide. When you look at it, it doesn't always sound great. It's an immense cost burden. Yeah? Look at the European banks, they almost make no profit anymore. Profit is neither good nor bad, but when a bank doesn't make profit, she's in trouble. It's in trouble. Yeah? That's just the point. And of course, all these changes after the global financial crisis also created risks. And I have to admit, I work a lot with IT guys. The sorry state is that very often these IT guys are a bit over-optimistic. Yeah? So salespeople and IT guys have something in common. Yeah? And that's, of course, a certain problem. They usually say it's no problem until it's too late. Yeah? And that happens with all IT aspects in this world. Next slide. But the challenge for supervisors is equally true. We have, of course, on the side of supervisors also the challenge to adapt and make decisions on an entire new basis. When you have more data, it's not necessarily that it's easier to make a decision. You have to weigh more factors, and you have to give the right emphasis on the right factors, and that makes it, of course, a bit burdensome to deal with it. And the other thing is, when you know too much, you are enticed to enter into micromanagement and adopt the function of the CEO. So why does the CEO get so much money if you make the decisions? Yeah? And who is liable if you're wrong? Yeah? So there are many decisions. It's enticing to have this power. But it's crucial to restrict yourself, to give businesses still the opportunity to be innovative, and at the same time give them the responsibility when they're wrong. Otherwise, all the blame will be put on the regulators, because the answer I didn't know is not available anymore on the side of regulators. So there are lots of things that when a RegTech development is coming about, is going to change. And both from the side of intermediaries and supervisors, there are many questions to be asked. And again, I'm not aware of a single answer to any of the questions I'm listing here. For instance, how we delineate responsibility in this world will be the most crucial one to keep a flexible financial system in the world. How all of this relate to financial inclusion? Well, we all know financial inclusion has many angles, and it's too easy to say FinTech, RegTech will solve everything. We need to have more focus on small things. So for instance, we have our EID programs, and you all know it, that this is a huge, huge problem. When you don't have an identity, you cannot open a bank account. Here is work on the go. I just leave it with the reference to this program, but digital identity matters because we have so many people that don't have an identity, and that may be their problem. I have to say that maybe the global identity is not a problem for financial inclusion. For us, it's enough to have a partial identity for financial purposes. Yeah? That sounds like a bit selfish, but if our focus is on financial inclusion, we want to solve the problem with banks. And for that, we can generate a basically private-public type of partnership. If a full public EID system doesn't work, then let's build a finance-related EID system for our purposes. We have a lot of individual things, biometric scans, fingerprints. With that, together with a bank account number, we get some good client ID with which we can work. And then let's not wait for the sluggish big questions to be solved, but let's work on a sectoral matter, because for us it's important that people don't die tomorrow. It doesn't matter whether the politician likes to have an identity card system 10 years from now. Tomorrow the people must have access to the services. And this is something that private-public partnership, the central banks together with the institutions can usually solve much better than when we want to have a very general answer. Yeah? So if there's a general answer, good, but if there's not, yeah, that's not the point where we have to wait. Next up. when we look at the next good example where financial inclusion was helping us, the most striking example here, to my knowledge, is Kenya. But when I look at your wonderful numbers here, it's very encouraging that in all but one IDB member countries, more than 50% of the population have a cell phone. That is something where I would say that the access problem, which was a struggle in the past. Can I have, please, some water? The access problem, where we had some issues in the past, that is solved. Access itself is not the problem of financial inclusion anymore. And that's revolutionary. When we start thinking 10 years ago, the problem was, thank you very much, the problem was that our local farmer, 50 kilometers away from anything like a bank, could not open a bank account because it was too costly, he didn't have the documents and whatever. This is solved. This is the past. It's not already equally mature in all countries, but the key struggle of financial inclusion is past. Is a matter of the past. And another thing is likely to be a matter of the past, which is access to funding. I give you these numbers knowing that they're loans and that they charge interests here, but it's from India, so a country that a few years ago had huge issues to provide funding to SMEs, and they have solved it. They provide e-funding. There's a full loan program that works and which is able to bring money where businesses are, and this is the function of the financial system. Take money where there's a supply and bring it to where there's a demand at the most at the lowest transaction cost, and this is solved. Yeah, so the two key question of financial inclusion, access and liquidity provision. With technology, it is a matter of the past, but that doesn't mean that the system is perfect. We have another example here, very unexpected. Yeah? All of a sudden, shopping platforms, entirely unrelated institutions provide finance. Yeah, when you look at China, for instance, here, we know that the big 3 Chinese companies are liquidity providers to their shops, which are attached to the internet platform. No one has thought about that 10 years ago, that shopping houses, yeah, let's say department stores, if you like, become banks. Yeah? That's revolutionary, but they show again that our liquidity provision, which was a matter of the past, is now about to be solved by virtue of technology. Next slide. The point is, of course, they create other problems because these tech firms itself get too much power. Yeah? I speak about entities like Alibaba and so on because this is how they operate. They are in between the clients and whatever is behind them, and if the middleman, again, is into trouble, everyone who's connected to the middleman through this middleman is in trouble. Yeah? So they create a new monopoly power, and this is something that I will highlight as one of the new issues that we have here. And that also is a problem because financial regulators don't have access to them, because they don't have any money on their balance sheet, which is a reason for regulation. They don't have any clients solicited, which is a reason for regulation. They have only data points, and they only make connections. Yeah? So it's a bit like an introducing broker that's not a broker. It's just introducing. Yeah? My point here is our established ways of regulating financial institutions falter when we look at these institutions. That needs some adjustment, and our proposal was just to look at data coverage, and if they connect financial institutions to their data coverage, then we need to look at them, because otherwise our financial institutions will suffer when they suffer, and that's something that we try to avoid. Next slide. Of course, when we start looking at it, FinTech Regtech has solved many issues. And next slide, when you look at it in particular, at what FinTech and Regtech should deliver, yeah? We have a full list of what we want. Yeah? We want to, from ID to know your client services to a lot of regulatory decisions, maybe up to digital sanctioning. By the way, digital sanctioning is nothing that is new. When you get a speeding ticket in most countries of the world, that's fully automated. Yeah? The interesting part is why it is not automated when a financial institution violates a traffic law. That's, the question is not whether it's possible, the question is why it doesn't happen in the financial sector. Yeah? So digital sanctioning is nothing that we dream, it is something that's very real. But the point is what FinTech and Regtech has delivered. Next slide. You will see it. Yeah? Digital ID solutions, we have sectoral solutions. because without ID we don't have any banking. Yeah? We have solved the access trouble, the liquidity provision trouble, and to a certain extent the digital reporting trouble, yeah? Because banks can just digitally report. But as you see from all that I have here, that's not the end of story, because the system is not complete. It's very patchy. And it means that where the patches are the problems. For instance, when we have digital reporting, but we cannot master the data anymore, the supervisor is usually drowning in data. Maybe the supervisor knew a little bit about it. Knowing usually means active processing. Here, however, they have it somewhere on the files, but have not processed it. Yeah? And here, of course, it means that we need to have a new way of analyzing things. And here, of course, our finance colleagues are strongly developing models how to use the data. But what are the to-do points? The to-do points are basically the core of financial inclusion. The core of financial inclusion is not access anymore. It's the right use. It is basically where the human factor comes in. Of course, I can give to a farmer in the rural south money, but I cannot ensure that this farmer is doing it correctly. It's using it correctly. I cannot ensure simply by giving money to them that they're better off. Maybe they're worse off. Maybe they're wasted. Yeah, maybe money we give them for the school of the kids is spent on some illicit activities, gambling. All right? It's gone. The point is we need to move from seeing access as a key problem as what is the adequate use. And for that, of course, technology can help. But it will bring about a new way of financial exclusion. And I will speak about that in the next 3 minutes. Next step. When we look at what the full digital agenda mean, the question is how do we get there? And how don't we just get patch solutions? And we have basically 4 principles. I just mean 4 because there are many more, but time is limited. So there are 4 principles which are in the so-called G20 financial inclusion agenda, and I want to use these 4 principles because it is something that we can really use hands-on to show what works and what doesn't work according to what we as academics know. Next slide. When you look at it, usually the fact that regulators must promote this, I think that's okay. That's very clear. I think it's also a bit simple. Okay? Of course, when you don't like something, it will not happen. You can always ban it. But everyone likes progress. Everyone likes innovation. So I think that is simple. But the question here lies with the detail. Do you want to have the large picture or the small one? We believe you should start small and develop from there, because otherwise systemic risks are just immense. Yeah? And when you have your island solution, let's say in payments or in crowdfunding, then slowly connect, but be ready to disconnect, because tech is not perfect. Yeah? Next step. The second principle is a bit harder to chew, because balancing innovation and risk control sounds like a wonderful political message, but when you're on the ground and need to make the decisions, it's not so easy at all. Yeah? We don't know what the inventions can do, and neither the inventors know it. When you look at the algorithms of today, self-learning algorithms, I dealt with it for quite some time, and not a single IT guy can tell me where the end of self-learning is in the algorithm. So let me give you an example what this means. A self-learning algorithm, for instance, may single out clients according to their credit history. The credit history in certain societies is usually influenced by existing biases. Yeah? So for instance, when the business activity was limited to women, and you look at the data of the past, women don't get credit. And now you can play that with religion, with skin color, with every type of discriminating factor, because the data of the past are reflecting the past. So the question is, how do we move forward here with self-learning algorithms? Well, the self-learning algorithms don't tell us anything about it. Yeah? But we should not trust them in this case, because we need to know the deficiencies. And this is exactly one of the many examples that we have when it's about balance and risk and innovation. It sounds so great to have an algorithm firm that pays taxes, employs people, and so on. But at the same time, it is maybe a new problem that we're creating, and defining this new problem only works when you are close to the entrepreneurs, when you speak with them, when you have many different views, when you are not a supervisor, a regulator, but part of a learning team. That's a matter of attitude. And this is the good thing about certain initiatives that we have, like innovation hubs or something, that you start to speak, that you start to be educated by those that you are supervising. Next step. Of course, how do we create this type of balancing environment? It's not the regulator sandbox. Everyone, I spoke about the regulator sandbox 20 times last year. That is not important. It's just a big publicity stunt from the British FCA, yes, and that's not the key point. The key point is we have to balance the risks with innovation by knowing each other, talking to each other. Next slide, and then I'm done. When you look at all of this together, it is very, very crucial to consider that tech is not perfect, that cybersecurity risks come up, that bugs will happen, that you don't link too much, too fast, but that you tackle specific pain points, ready to chop off whatever you did and shut it down tomorrow if it doesn't work. Because it's not just the technology, it's also the people. The people have not changed. They're still, when you're dealing with finance history for the last 2,000 years, it's a history of fraud and fear. And that doesn't change simply because there are bits and bytes in it. With that, ladies and gentlemen, let me quickly come to my conclusion. The point is that FinTech, I think you moved back, forward. Okay, so the point is FinTech, RegTech, great, wonderful opportunities, but not all is great. The great part is we can save money, we can make the world more efficient, but at the same time, let's be aware of the risk, because you as regulators will put your head literally on the block when you allow it. No, I'm sorry, but okay. So, and the point here is, of course, that when FinTech and RegTech comes, that you as regulator have to communicate, allow the small steps to happen, and always look at the larger picture. And the only lesson that I can really give, because there is no boilerplate solution, not for any country, not for anyone on the world. Everyone has done mistake and everyone will do mistake. The only solution that I can give as a researcher is that all public institutions must speak openly with each other and forget the turf protection. Because sometimes comes from consumer protection, sometimes from the central banks, sometimes from the insurance regulator, sometimes from other parts. When you communicate and speak with each other and consider that only good people can make good finance, that can be a bright future. And with that, I leave you. Thank you very much.
Thank you, Professor. For this excellent and comprehensive presentation. Our next speaker is Brother Omar Munshi. Omar Munshi is the founder of Malaysia-based Ethis Ventures, an Islamic fintech venture builder. Its flagship platform, globalsadaqah.com, an Islamic social finance crowdfunding marketplace, was launched in early 2018. Munshi is also the managing director of Singapore-based ethiscrowd.com, an award-winning real estate Islamic crowdfunding platform. ethiscrowd.com brings together retail crowd investors, larger private investors, and Islamic banks to fund social housing developments in Indonesia, supported by the National Housing Program. Brother Munshi is also the CEO of nusacapital.com, an Islamic P2P crowdfunding operator licensed by Securities Commission of Malaysia. He is an Islamica 500 Islamic economy influencer and the founding chairman of the Islamic FinTech Alliance.com. The floor is yours, brother, please.
Assalamualaikum warahmatullahi wabarakatuh. Firstly, thank you for having me here and for making time to listen to this short presentation. Before that, I'd like to thank Mr. Metin Ozdemir, Mr. Nouri from Adfimi, as well as Mr. Nabil from Zaytuna Bank. Now, my perspective will be very different from the earlier presentation, which was full of information. And inshallah, there's some QR codes that you can use. You can use to access that information. And what I want to talk about today is more of sharing our experience, right? And we have a unique experience where we have brought crowdfunding to the Sharia compliance space. And today we have evolved further to become a venture builder to create more Islamic fintech products. But I'll go on to that later on. Let's go on to the next slide. So every time I put thumbs up, you go to the next slide, yeah? Okay. Now, oh, I can't see it. Yeah. Now, this is the prelude, meaning this is what I'm going to talk about today. Fintech in general is set to add and has already given a lot of new solutions to so many financing gaps. There are so many financing gaps in the developing world especially, and fintech can and has brought solutions, and there's a lot more solutions that will come, inshallah. Now, the second point is about Islamic finance. This opportunity is especially important, especially valuable, and especially potentially impactful for the Islamic world, because this creates a system that does not rely on the bank, and this creates a system, or these are solutions that are directly linked to the real economy, and these are systems that are powered by the people. Yeah? So these are very Islamic angles or worldviews of seeing things. What I will do in the last part of my presentation is to share some real-world Islamic fintech examples, case studies, for you to understand better how it's implemented in the real world. And these are our friends in the Islamic fintech space. Very quickly, feel free to take pictures, share it on social media. I know you don't need permission, but feel free to do it. And there's also the live footage on YouTube. On LinkedIn, I'm very active, so feel free to add me and ask questions there. Later, inshallah, I'll take a look at the comments and respond to it also. And I'll be happy to share these slides with all of you. Now, how do you adopt disruption? Right? How do you embrace something that's disturbing the status quo? This is a very, very important question. And I feel that for this to happen and for this to really take place at scale and at speed, we need to change our mindsets. The two things here, right? One is mindsets, and secondly is the process. We need to change how we think about finance and how we think and what we think of Islamic finance specifically. And when we start to question what we're doing and how we're doing things, then there can be real change. Then we can embrace and accept and adopt disruption, in this case, fintech. Yeah? And disruption is a negative word. I don't really like it, but that's the word that everybody likes to use, so I'm following the trend. Disruption here is positive disruption. Right? It's a misnomer, positive disruption. Okay. So these are questions to ask yourselves. I assume most or some of you are CEOs, most or all of us are in Islamic banking and finance. So these are questions that we need to keep asking ourselves. Who are we serving? Are we serving people who do not need money? That's what a lot of banks do. Or are we serving people who really, really need the money? Right? That's the first question. How do we deal with risk? Do we package it up and hand it over to somebody else? Right? And when something goes wrong, he's responsible, he gets in trouble. That's how I got introduced to Islamic finance. You know, when my previous business had a problem and the bank became from a friend to an enemy, then I discovered Islamic finance. Because in Singapore, you know, it's all conventional. Anyway, third question. What are other considerations that need to be inbuilt in the system? Do we think about spirituality? Do we think about religion when we do Islamic finance? Do we think about society and the people? Right? Or is it all stakeholder interest, shareholder interest? Is it the bottom line? Is it the top line? Right? So we have to think about all these things. I'm just asking you questions for you to think. Yeah? And the last one, what is our mindset towards the ownership of wealth? Do you own the money in your pocket? Do you own the money in your digital wallets now? Right? Is it your money? Or when you go deeper, is it purely a form of trust, something entrusted to you to do good with? Yeah? So these are philosophical, important questions that we, as leaders in Islamic finance, need to keep asking ourselves, asking our leaders, asking our people and institutions, inshallah. So Islamic FinTech, what's so special about FinTech or Islamic FinTech? I believe this is a huge and unprecedented opportunity to recreate our own systems. And if you look at the West, they have implemented systems that are actually very fundamentally Islamic in FinTech. Right? If you look at the latest InsurTech platforms, there's a lot of elements of takaful. They give back the access to their to the insured customers, right? That's what takaful, that's part of what takaful is trying to be or has done. We see crowdfunding in the West now moving towards revenue sharing crowdfunding because it makes sense. Yeah, we all know that trust law came from Waqaf, right? So all these things are happening and these things are there and they are being implemented, but we are not yet embracing it properly, and we need to. And that is the opportunity that I see in Islamic FinTech. Now, the last 3 points are also important. It's an opportunity, an avenue to reach those that the banks cannot or do not want to reach. Yeah, because you break down barriers, you remove a lot of cost, a lot of bureaucracy, and a lot of restrictions when you go into FinTech. Yeah? And the next one, what I mentioned before, is that it's linked directly to the real economy, or it can be linked directly to the economy. There's no need for an intermediation in that sense, the way it has been done in the past. Yeah? And last but not least, this is an opportunity to work with Islamic economy stakeholders. We need to work with stakeholders. The banks, Islamic banks, Islamic finance institutions cannot focus on the financial economy without bringing in, for example, the religious authorities. It is a big challenge. I'm sure those of you who engage with religious authorities and leaders understand the challenge, right? There's a lot of conservative mindset. There's a lot of feeling of protecting what they have established so far or what they have under their care. But this is something that needs to be done. And the carrot approach can work well, right? Show them, share with them the benefits of engaging with finance, or in this case, FinTech. Now, I'd like to highlight 4 key changes, right? 4 important changes that will affect how Islamic finance moves to Islamic FinTech, or how Islamic finance starts to integrate Islamic FinTech to its ecosystem. The first, these are the 4 points I will go through, right? There is a change in decision-making on where money goes. I'll explain how this works, or why it's that way. Secondly, people are attracted to value and impact. Right? It's no longer about branding. Right? Branding is still important, and there are ways to sort of game the system online. But at the end of the day, people know what is real and what's not, and that is what drives or attracts loyalty. The third is about being mobile first. I'm sure all of you have heard of this. Right? It is all about the mobile phone today. And the last one, it's about being transparent and open. Yeah, these are 4 very important changes in the market that I will go into more detail in. Investment decisions. 3 points. Firstly, crowdfunding. Right? When I started doing crowdfunding about 2.5 years ago, the company is 4 years old, but we became a crowdfunding platform or a technology provider about 2.5 years ago in Singapore before setting up something else in Malaysia. Now, when we started doing crowdfunding, people were coming up to me and say, "You're not really FinTech. Where's the tech? You know, what's so high-tech about a crowdfunding platform?" And I'll tell them, we're not here creating new technology. We are using existing, readily available technology to create a new model. Crowdfunding is a new way of doing things, where people decide and people collectively make a decision on where money should go to, right? It is no longer the bank's system that decides in a crowdfunding platform. Of course, we have our own procedures and so on, but at the end of the day, I don't have control about where money goes to and how much money goes to that project or that campaign. Right? So this is a very important change, And this is the change that we need to ride on because people naturally want to do good. That's what we observe. Yeah? The second one is about robo-advisors. Yeah, today, investment decisions are made by algorithms. And it is still, I believe, in my opinion, a work in progress. There's a lot of things that need to be done before this becomes really stable. But it is a hot topic and it is a trendy space. Robots or systems and softwares are making investment decisions for people. Right? It's no longer people making these decisions. And the last one, it's about having a finance ecosystem. This is similar to what was mentioned earlier, TechFin, right? Where e-commerce platforms or chat, originally chat apps, transport apps, becoming a super app where they have everything you need in one app and money flows within that app without even going to the bank. So you can transact, you can buy, you can donate, you can invest all within an app. So if you're using a super app for most of your transactions, where will you start to invest? In what the super app has in its system. Yeah? So these are 3 points that I want to highlight for my first point on how investment decisions are changing today. Right? Okay. Now, if you have any questions later, we'll have a Q&A. So please take note, jot down whatever questions you have. We'll be more than happy to answer later on. The second one is about loyalty to value and impact. It is all about value, how much value you create online in your fintech platform or in your financial service. That is what will attract people. Yeah, that's my second point. Good value increases user adoption and spread of use. When people like the solution because they feel that they have significant value, they spread it to their friends. And that is the most powerful form of expansion online. Yeah? Back to the first point. When you do things online, a lot of it revolves around social media. Yeah, we grew almost entirely from Facebook and LinkedIn, and today, of course, we have YouTube and Instagram and the rest. But the driver of our organic growth with very little or almost no money is social media. And people like to share good things. Right? So when there is a social investment that has good social impact, and they feel there's value created for them when they participate in it, they'll be very happy to share it online. And they become your brand advocates. Yeah? So this is very important, and it has to be real. Right? When you have, for example, an oil company advertising about being green, people are wondering, you've been destroying the environment for so long and now you're trying to be green. So it is a good thing, but people still look at the core value of the business when they approach the market. Yeah? Now, the last part is about impact, and this is related to the earlier point. When there is impact, when there is change, positive change, when people feel good about what they are participating in, this tends to go more viral. Of course, funny dances go more viral sometimes, right? But at the end of the day, impact is something that people like to share. Okay? So this is my second point. On to the third point. Mobile experiences. Today, it is all about how your solution works on mobile. Desktop is also important. Desktop is still relevant, but increasingly, and this trend is set to continue, is going to be about the mobile. It's going to be about the mobile phone. And we need to make, I mean, I assume all of you here are focused more on developing countries because that's the theme of this session. But for all markets, whether it is the developed world, whether it is the rich first world, or whether it is the third world or the developing or emerging world, mobile first is definitely a very important factor to consider. Yeah? Let me go on to the next slide, where we have some statistics. So you can see developing countries up there, and developing countries below and developed countries above. And you can see that all of them have very, very high usage of the internet on the mobile phone. Indonesia, 91% of internet usage is on the mobile phone. So if your solution or your service exists in the desktop, nobody has a computer to view it. Right? What they have are mobile phones. Yeah? Fourth point, transparency. Transparency creates trust. And today it's all about who you trust online. And that is what creates the ecosystem. Right? So the first point here, FinTech creates or can create an open and direct communication between stakeholders, between the owners of the solution, between whoever the the source of funds come from and the consumer. Right? You can create an environment where everybody is directly connected, and when that is created, you can also inbuild mechanisms that create more trust by providing transparency. Yeah? So transparency is a very, very powerful market force that will drive usage and drive behavior. For example, Global Sedekah is a platform for Islamic social finance. Right? So it's not so fancy, but it is a huge problem. Sedekah, zakat, wakaf, if these three are properly channeled, then we will probably solve poverty very quickly because there's a lot of money there. Zakat alone is estimated to be at $500 billion a year. So where's that money going to? Why are the poorest people still Muslims? Now, when we build a platform and we go to institutions, some of them initially are resistant, but when we tell them we are here to find for you money, they immediately get a bit more interested. And then we tell them to get money, this is how you do it. You need to be transparent. You need to show the calculations. You need to give reporting. You need to be accountable and share the impact of what is done. Then they start to be more interested because then there's money behind it. Then money will come to you once you start being transparent online. Yeah? So the second part, it's about blockchain. Yeah, smart contracts and blockchain. Now, there are a lot of small case studies and pilots. This has not been done in scale from my knowledge, but potentially we're getting there. Right? Technology is improving so fast, and this can create a system where things are automated. Yeah, smart contract is basically a programmable contract that can communicate with different parties and transact also automatically when certain rules are followed. Yeah? So that's what smart contracts are about, and this can create a lot of transparency because you know the rules up front. You know how the system is supposed to work at the initial or at the beginning stage. All right, so I'm done with my 4 main points, just to give you an idea of how things have changed and are continuing to change. Now I want to go on to how we can potentially adopt FinTech for Islamic finance. Yeah? So first, I want to highlight the concept of a startup. Right? I've been doing business since I was 18 in different startups. And it has been a challenge. Today, it's much easier to build and start and scale a startup than 10 years ago or 15 years ago when I started. There are three forms of, or three structures of startups. One is talent comes first, the entrepreneur is there, he builds up something, and then he finds money. The other one is money comes first, right? So you have an investor or you have a big corporate that has an idea, and then they buy the talent or they pay the talent to come in, right? And the third one is both coming in together, right? For example, a lot of the big startups today came from startup founders who successfully exited their previous startup. So they have money, they have talent, they start something new, and it grows very fast, right? So these are theoretical. Let me show you what's really happening in the world today. I'll read it out in case you can't see it. Startup programs to incubate The third one is they launch their own companies, right? Some banks launch their own companies, a spin-off kind of approach. And the third one is they acquire fintech companies. So when fintech companies reach a certain stage, they are acquired. Sometimes they are left as a silo to perform on its own. Sometimes they are subsumed into the bigger financial institution. And lastly, setting up venture funds to invest in fintech companies. So these are things that are happening in the conventional space. And it's just only now starting in the Islamic space. And I'll highlight some examples later on. Next. Here are ready-to-go solutions. You don't have to have a world-class technology development team to have this. These are readily available. These are concepts and solutions that you can try to implement in your own institutions. Firstly, of course, crowdfunding. Yeah? We work with institutions to build platforms for them also. Secondly, payment apps, community apps, lifestyle apps. These are also solutions that are readily available that can be introduced to new markets. Takaful tech products, right? Takaful tech or InsurTech for Takaful is something that is having a lot of talk, a lot of discussion, a lot of panel sessions, but you haven't really seen any big successful ones or early ones that have gained traction. I know there are a few initiatives, and inshallah they'll work out. Yeah, but we're still waiting to see the big ones or those fast growth ones. And it's a matter of time before this comes. Yeah? In our venture builder, this is one of our main focus. We are working on developing a Takaful tech platform or solution to roll out to the market, inshallah, later this year. The last one, ICOs, cryptocurrencies, that's a very hot topic today. Sharia scholars are debating about whether Bitcoin is halal, whether Bitcoin is not halal or haram, whether ICOs are allowed, whether you can create value from nothing, whether you should have underlying assets, and a lot of debates there. And in my opinion, the main issue is about speculation. Yeah, if you can set rules inbuilt in the system to curb speculation, then potentially this is something that has immense value for the Muslim world. Yeah? So I'll stop there for now and move on to a few case studies, starting with ourselves. Yeah. So atheistcrowd.com, the platform started 2.5 years ago. What we do, as Mr. Nuri shared earlier, is we are a marketplace for different kinds of investors and funds to come together to invest in social housing developments in Indonesia. So alhamdulillah, over the past 2.5 years, we have invested in many projects to build a total of about 5,000 houses for low-income people, low-income families in Indonesia. One house is sold at about $8,000 US. That is a government-backed mortgage scheme where the Islamic bank will be the off-taker or the buyer. So that reduces a lot of risk for the investors. And alhamdulillah, right now we're in the process of scaling this up a lot, especially with the involvement of institutional investors. Right? So it is social impact or a social enterprise, and there's definitely good profit to be earned from the system. Yeah? Secondly, what we've done is we've set up recently, just last year, and we have our chairman today, Dr. Razif here. We have set up Atheist Ventures Islamic FinTech Venture Builder in Malaysia, and the first platform is Global Sedekah. We've started with Global Sedekah because what we want to do is to bring in the ecosystem together, to bring in the stakeholders together, and do good things together. That's maybe, inshallah, the easiest way to start. And it hasn't been easy, but alhamdulillah, it's gaining traction. Yeah, so we have in Malaysia the Bank Islam, which has come on board, and a few other banks that we're talking to. And alhamdulillah, in 2 days' time, we'll be having an agreement signed with the Islamic Development Bank to embark on a program on Global Sedekah together, inshallah. What we have also done is we have spread our seeds. Yeah, we have set up partnerships in 7 countries, right, including in South Africa. Yeah, we have Atheist Africa in South Africa set up recently. And we have also built 5 crowdfunding concepts, proof of concepts that are shared in the next slide. These are our 5 concepts that we have right now. The first one, as I shared earlier, is the real estate platform. We have an SME platform called Capital Boost. We have Global Sedekah. And there's Sekolah Fund, which is founded by a team of students that are now part of the group. They have given micro scholarships from the public to close to 200 students to date, alhamdulillah. And this is just public giving money to students who need to pay their school fees. Yeah? So alhamdulillah, a lot of goodwill. Nusa Capital is a new platform that was recently licensed by Securities Commission in Malaysia, and here we are approaching it on a product-by-product basis, step-by-step, inshallah, in a regulated environment. Okay. Here's our team, just to share with you. There's the KL HQ team, the operations team. We have about, how many people here? I forgot, 2, 4, 6, 8, 10, 12. Yeah, about 15 people, yeah, because we have a lot of interns coming in and out. Most of them are Islamic finance graduates. All of them are young. I'm the second oldest in the team. And we have a Jakarta team also, alhamdulillah. Yeah, so very passionate young people. Very quickly, I'll just skip some of these parts. These are the internal entrepreneurs in the team, in the company. Myself and Ronald, we've been doing business together for 10 years. Next. This is very interesting. In the first 2 years, people did not understand or care what we were trying to do. In the last 2 years, we've had proven Islamic finance leaders coming on board. So people like Dr. Razif, who was the Managing Director of SME Bank Malaysia. We have Dr. Shamsia, we have Maritz. These are people who have done big projects, big funding, and alhamdulillah now that they've joined us, we are looking to scale up to the next level. Yeah. Next, this is our facility in Malaysia. We are the world's first Islamic fintech-focused venture builder. Venture builder is a concept where we create internal companies. Yeah? So business units or products internally, once it reaches a certain scale based on the group resources, then it can potentially spin off into its own entity. It's a bit different. It's the reverse of a venture capital model. Yeah? So alhamdulillah, we have big space and a lot of capacity to grow right now, which was not the case in our early days. In our early days, it was very tough to grow organically with no resources. Alhamdulillah, now we have reached this point. And the next few slides will focus on other concepts, on other Islamic fintech companies around the world that have started and gained good traction. The first one is yielders.com. Yielders.co.uk. There's a mistake there. Yielders.co.uk. Yielders is a Sharia-compliant crowdfunding platform licensed by the FCA, and their focus is on real estate, a little bit different from what we do. We fund development projects, they acquire assets, and then they share the returns from rental yield with investors. Yeah? So Yielders has been around for 3 years, 2 years focused on regulations, and in the past 1 year expanding the business, and today they are expanding in other parts of Europe also. Very interesting concept, also a young dynamic team. Next we have Wahid Invest, which is based out of the US. It is the world's first Islamic or Sharia compliant robo-advisor, also by a young team. Last year they brought in some good Series A investment, about $7 million from Islamic finance leaders. So inshallah, I'm really expecting big things to happen in Wahid Invest. Yeah? The next one is Halal Chain. This is a blockchain and Internet of Things initiative in Dubai. And what they are focused on is the halal supply chain. Right? They have done an ICO late last year. They did a private placement round followed by a public ICO and raised quite a large sum amount of money. And it's a huge endeavor to link up the physical supply chain with technology. Right? And alhamdulillah, right now they're starting a pilot phase with a government-owned or government-linked entity, food supplier, food distributor in Dubai. So alhamdulillah, I'm also one of the advisors of this company. And the next one, this is Algo Bahrain. Algo Bahrain is a consortium of Islamic banks. They came together, pooled some funds, initially 2 banks, and I think another 4 banks are coming on board. So they pooled their funds to create new fintech solutions for the group to be shared by the Islamic banks in the consortium. And this is really something that I feel other countries should follow, or even cross countries, cross boundaries. Banks should come together to work together instead of everybody doing their own thing and there's duplication or there's double resources, there's wastage and so on. Instead of competing, let's all develop things together and implement it within our own companies. Yeah? All right, so those are the examples that I want to highlight. And this last few slides, this first slide is on what are the challenges for Islamic banks that I observe when I engage with them. Firstly, it is, of course, very strict, tight regulations. It's difficult for banks to really create new things that are outside of what they typically do. The internal risk appetite is also an issue. Right? Sometimes in the management of the bank, the stakeholders want to do it, or one guy wants to do it, but the rest are afraid of the risk. And that has caused a lot of paralysis in Islamic banks that I know. Third is, once they are on board, to get it approved takes forever. It takes a very, very long time. The bureaucracy is very difficult to navigate. Even the bankers find difficulty navigating their own bureaucracy. Right? And the last one is about culture or mindset. A startup culture is one where you keep looking for solutions and you keep adapting and evolving and responding to the market or to the challenges that you face. Whereas in the bank, it takes too long to have an iterative process. Right? When they roll out something, it's rolled out. If it fails, then they have to restart and roll out again. Whereas for us, every day we're rolling out something new. Right? Every day we're adjusting and improving and changing. Right? So what I feel needs to be done is, before that, our second last slide. And I want to pause here for a while because this is an important opportunity that we need to seize together. Right? Please feel free to take pictures and share this. This is an opportunity for us to create an inclusive, participatory financial ecosystem for the Ummah, based on our own principles, based on our own needs and lifestyles. And what will drive this, I believe, is bank-fintech collaboration. Because fintechs, like I mentioned earlier, is outsourced, startups are outsourced innovation for the banks, right? Leverage on startups. $100,000 will do very little in a bank, but $100,000 given to a high growth or early stage startup can do wonders for them. If we were given $100,000 3 years ago or 2 years ago, we will be much, much bigger, inshallah, today. Right? At that time, banks were not yet interested in this thing. So, inshallah, today, we can see this moving. Last slide. What's needed? Second last slide. What's needed today, firstly, are visionary, courageous leaders. Alhamdulillah, there's a lot of talk and awareness, but a leader who actually creates the change and pushes and ensures the change happens is still lacking, but inshallah, we will see more of it as we move on. Right? Courageous leaders in the banking space and in the startup space. People who dare to get out of the box or to break out of the box and create something new, to take that risk, to create something for the future, right? Secondly, startups need investment. And alhamdulillah, the IDB this morning launched the Transform Fund, which is an incredible initiative that I believe will have significant impact on Islamic finance. Now, our challenge has been, we would like to have Muslim investors. So far, most or almost all of the interested venture capital or angel investors coming to us are non-Muslim, which is fine, it's Sharia compliant. We can accept non-Muslim money. But what we want to do is keep the spirit intact. And it's difficult for non-Muslim entities or individuals to understand the deeper spirit of Islamic finance, right? So this is a big challenge. It is a problem. There is an app in Singapore that most of you, I believe, or some of you would have, called Muslim Pro. How many of you have Muslim Pro? Yeah, Muslim Pro, right? It's very popular. It's the most popular global app for Muslims, and it came out of Singapore. Yeah, not many people know that. Muslim Pro was acquired recently by a fund that's not owned by Muslims, because they're interested in the Muslim space. They want the data. They want the access, right? Why are Muslims not understanding this value? Yeah, so that's a big issue. So we do need Muslim angel investors. We do need Islamic finance institutions to start investing in technology and startups. And the third one is mass education. The public needs to know. The public needs to understand. The public needs to appreciate that this is a change that can really create a lot of positive benefit. Yeah? All right, I'm on to my last slide, alhamdulillah. This is where I attempt to think of what may happen in the future. Right? What will probably happen in the future are three things. Firstly, you will see a lot of super apps. The successful apps, whether it's a transport app or a payment app or a chat app, whatever app it may be, when it has sizable traction, it will go into fintech. And it has gone into fintech, like what's happening in China. And then this app will become a super app, and that app will have a huge influence on society and a huge influence on the economy. This is a trend that is difficult to deny. This is a trend that will happen. It is already happening in many parts of the world. The second one is, especially in the Islamic fintech space, there will be regional leaders. In the conventional space, you have global leaders. I believe in the Islamic world, you'll have regional leaders for reasons such as differences of culture, differences of language, and so on. Yeah? And the third point, I expect to see a lot of collaboration between conventional fintechs and Islamic fintechs, because the conventional space is very, very much more developed than the Islamic fintech space. And when I meet conventional fintech companies, they are always interested to support and to help us grow in the Islamic space, because they understand that's not their community, but they have the technology and the know-how and the expertise that we can adapt, repurpose, repackage, and fit into what we want in our own way, inshallah. Right? So that's all I have for you today. Next slide, we have my details, brother. Right? Feel free to get in touch. My WhatsApp number there, my WhatsApp number is there, my email is there, and I'm always available on LinkedIn. Thank you for your time. I look forward to a lot of questions later on. Assalamualaikum warahmatullahi wabarakatuh.
Thank you very much, Brother Munshi, for this very informative presentation. Our third distinguished speaker is Datuk Mohammed Razif bin Muhammad Yunus. He is the chairman of Ethis Ventures, an Islamic fintech venture builder in Malaysia. Razif's illustrious career includes entrepreneurship, leadership roles in industries spanning real estate, infrastructure, GLCs, and finance, including Group Managing Director of two prominent institutions in Malaysia, namely SME Development Bank and the National Heart Institute, where he led successful corporate transformations. Datuk Razif was recognized with the Malaysian Business Leadership Award for Healthcare in 2009 and CEO of the Year in 2015 by ATFIAP. Datuk Razif was also chairman of ATFIM, Association of Development Finance Institutions of Malaysia, and he was a vice chairman of ATMIMI for many years. Now, I would like to invite you to make your presentation. Thank you.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Alhamdulillahi rabbil alamin wassalatu wassalamu ala asyrafil anbiya wal mursalin sayyidina Muhammadin wa ala alihi wa sahbihi ajma'in. Rabbi shrah li sadri wa yassir li amri wa hlul 'uqdatam min lisani yafqahu qawli wa saddid lisani wa hdi qalbi bi haqqi sayyidina Muhammadin sallallahu alaihi wasallam. Mr. Nabil Madani from Bank Zituna, Mr. Metin Zaima, chairman of FIMI, and my brother Nuri Bertek, who I've known for a long, long time since I came to be introduced to ATFIM. I think he is the main man when it comes to ATFIMI. Nothing moves without Mr. Nuri's involvement in ATFIMI, and I think the effort that he's put in deserves a round of applause. I do not intend to go through my presentation in the manner that I've prepared, purely because I think it's been covered by the two speakers before me, both Professor Dirk, as well as Mr. Omar Munshi. So what I'll do is, I think probably what I intend to do is talk more about financial inclusion and try to bring it together with regards to the context of a development bank. And I think, as you all would, some of you all would know, that I think I've been in a development bank setting for the last 7 years. And I think more with regards to the Association of Banks in Malaysia and Development Banks in Malaysia, as well as the Association of Development Banks in member Islamic countries of ISDB. So it's important for us to take into account the keynote address being given earlier on about Industrial Revolution 4.0 and what it means to all of us within the context of the development bank setting vis-a-vis that of FinTech, and why it is important for us to be able to adapt and to adopt with regards to this new FinTech revolution that's coming on board. Because I think ultimately development banks, given the context of regulations that's coming in by virtue of Basel requirements and whatnot, because the need for you to actually make provisions based on expected losses would then in a way stifle the growth of development banks for the future. So one way of moving out to that is basically to look into this context of adoption of FinTech. I'll also put forth a case with regards to why it's also important for us to actually look at FinTech from the context of financial inclusion within the context of member Islamic countries of the IDB. I think I've got some charts to share with you. So please bear with me. I'm going to flip through the slides back and forth. Is Mr. Khan there? I'm going to flip back and forth with regards to the presentation slides, and we'll take it through step by one. I'll go through, in terms of the presentation, I intended to actually go through the overview of FinTech, focusing on key innovations, crowdfunding platforms, and distributed ledger technology. That has already been undertaken by Dr. Dirk in his presentation, so I'll skip that. I'll talk about the challenge of financial exclusion in the Muslim world and how FinTech in general and Islamic FinTech in particular may help address this problem. Some of it I think has been alluded to by Mr. Omar, but I'll just touch on issues. So I'm just going to bring it all together, hopefully from the perspective of the development banks and why it is actually important for us to be able to adapt and to adopt FinTech moving forward. And of course, there are Sharia issues and regulations of Islamic FinTech. Now, in the sphere of development bank, the role of supervention and intervention is important. Development banks need to provide financing to areas of growth, create new set of businesses, uplift or scale up a group of businesses or entrepreneurs that has potential to grow, and create greater economic well-being. It also serves to create new entrepreneurs. So that's the role of development banks. So we have got space that we are supposed to take care of. So in essence, we come in the supervention role with regards to providing financing to people who are construed as unserved and underserved. Right? So having said that, development banks are hampered by policies, by regulatory concerns, and sometimes by interference, lack of funds, etc., to have the ability to really reach out to the level of financing access that is actually important to grow a certain sector of the economy. Next, please. Okay. I'll go straight away to section 2, which is basically talking about financial inclusion, and allow me to actually elaborate a few important slides with regards to this section. First and foremost, FinTech enables and enhances financial inclusion. I think that has already been a case that's already been put forward by both the first two speakers. So investment crowdfunding platforms may be an effective solution where micro and small business finance have infrastructure and distributed challenges and high costs. So the other thing is information asymmetry, which is actually a predominant issue with regards to small and medium enterprises. And monitoring costs are reduced through technology. So eliminating the local intermediary and reducing the cost makes the investment more effective. All right, are we on the right slide? Slide before that, please. Before this. Yeah, this is the one. Yep. Thank you. So let's go on the next page. This is the statistics. Next one, please. This is the statistics with regards to the context of percentage of those having accounts and percentage of those who have saved within the last 12 months and percentage that's borrowed within the last 12 months within the top 5 OIC member countries. Okay, and if you look at it in terms of statistics, you have all the countries which are economically developed, getting a lot of a number of percentage of accounts. On the right side, you have number of percentage within the last 12 months who have had savings. Nigeria being on the top of the list, and Uganda at the bottom of the list. And of course, the last percentage borrowed within the last 12 months, you have a lower borrowing rate with regards to countries in Bahrain, Kuwait, Bangladesh, Azerbaijan, and Qatar. Next page, please. And this is actually the bottom five OIC and IDB countries. And if you look at the percentage of having account in places like Turkmenistan, Niger, Tajikistan, and Guinea, I can't pronounce, Kyrgyz Republic, If you look at the numbers, the percentage of having accounts is very, very low. And similarly, with regards to percentage saved within the last 12 months, places like Pakistan, Turkey, Azerbaijan, Tajikistan, and Djibouti, and of course, percentage borrowed within the last 12 months. Now compare that, okay, within the next slide, please. Now this is actually a snapshot of average of 39 OIC and IDB countries versus that of 67 developing countries and the average of 28 non-Muslim developing countries. Now, if you look at the numbers within the first line, which is the average of 39 OIC IDB member countries, you can see that there's not much disparity between the 67 developing countries and 28 Muslim countries. But you refer to the earlier two slides of the top 5 and the bottom 5, you can see the data is a bit skewed. So that's the reason why we work in terms of law averages. When you have a high number at the top and small numbers at below, the average will come up to the same number as per what it is. So there's a great element of disparity of wealth within the member Islamic countries of IDB. And that, I think, is the issue why this context of FinTech becomes a predominant force in terms of changing. I think Omar has already alluded to that problem just now about starting an innovation, starting a mission, a sense of mission in terms of trying to actually getting financial innovation out to some of these countries to be able to upscale the capacity of all these member Islamic countries. Next. A significant number of Muslims self-exclude themselves from conventional microfinance on religious grounds, presence of element of interest. Islamic FinTech through peer-to-peer lending, crowdfunding, etc. can address such issues. Example, Kivazip offering microloans at zero interest, rendering such loans Islamic. And this is actually a non-Islamic platform, but they have actually taken loans on a zero interest rate financing. This is for microfinancing. This is equivalent to Qard Al-Hassan in a way. Microfinance products and services based on asset-based and risk-sharing finance, turning them into Sharia compliant, are also a possibility. Next, SMEs in Muslim world seek exclusively Islamic banking products. However, lending activities of Islamic banks are mainly focused on large corporate customers. The average share of SME lending in portfolios of MENA banks is only 7.6%. And this is according to World Bank as well as Islamic Development Bank study in 2015. So crowdfunding platforms may focus on SMEs. Current market shares in small business lending are in 12 to 13%. Let me quote an example with regards to Malaysia. Malaysia's financing assets is around about 90%. And even the 10% that are construed as unserved and underserved market accounts for close to about 10 US billion in terms of funding requirements. So you can imagine the size of funding requirement for all other countries, which is not in the same league as basically the more developed countries within the League of Nations within the Islamic countries. So let's go to the next slide. Yeah, this is actually the context of demand and supply of Islamic SME financing in sample countries. The green is basically the preference for Sharia compliant products, and the one in black is the offer, Islamic SME lending to SME, total SME lending. So you see there's actually a disparity between demand and supply, between what is actually required and basically what is basically been given out in terms of Islamic financing. So in a sense, a lot of upside in terms of financing is actually required within the SME space. Let's take a look at that with regards to crowdfunding UK and the European Union and North America. Next, please. This is basically the different type of crowdfunding platforms, loan-based crowdfunding, and of course investment-based crowdfunding. And in between there, we have the invoice trading. If you look at UK, the highest percentage is basically within the context of P2P business lending, P2P business lending, real estate, as well as P2P consumer lending. In America, the highest is basically peer-to-peer consumer lending, which accounts for about 83% of the total amount of funding that's being provided. So, in essence, next page, please. North American crowdfunding sector is much larger than its European counterparts. The US and UK are the two Western countries with the largest crowdfunding sectors, and crowdfunding is dominated by loan based models. P2P lending accounts for 72% in EU, 77% in UK, and 94% in the US. So startups and existing SMEs benefit much more from crowdfunding in Europe than in North America, where consumer lending absorbs more than 80% of the total lending. So in essence, if you were to try to correlate with regards to what's happening in developed countries with regards to what's been done here, and you look at in comparison with regards to the kind of context and the kind of access to financing with regards to the member Islamic countries, there's a potential with regards to crowdfunding, there's a potential with regards to FinTech to be adopted within the whole context of the Muslim countries. So we need to create an Islamic model that would be able to provide funding to create greater economic value for Muslims. Qard Al-Hassan is encouraged to assist, but now we need to translate that to an Islamic platform of a different sort altogether. Yeah. Next, crowdfunding in the Muslim world. This is basically the type of crowdfunding in the Muslim world. Singapore, there's two, which is basically Islamic only. In Egypt, there's 3 equity-based. Algeria, 1 equity-based. Morocco, 1 equity-based. Nigeria, 2. Lebanon, 1. Jordan, 1. And 4 equity and 2 loan in UAE. Malaysia has got 6 and 6. Cameroon has got 1 in terms of loan. Indonesia has got 8, as well as in terms of 8 financing-based equity, 8-based crowdfunding platform. So, next please. In 32 of the 57 member states of OIC, there are a total of 108 crowdfunding platforms. Now, avoiding a double counting of some platforms, the number of distinct crowdfunding platforms with a primary location in a member state stands at 80. So most of these are donation or reward-based platforms. There are 14 equity-based and 13 commercial loan-based crowdfunding platforms with an active status within all these countries. We'll skip the next two because Omar has already alluded to with regards to the role of at this crowd. So we'll go on Sharia issues. So Islamic FinTech implies new ways of bringing together a multitude of parties and agreements and contracts. As such, there are unique Sharia concerns associated with each Islamic FinTech innovation. So some of the Sharia issues, next page please, Sharia bets for transparency, responsible pricing, fair treatment, privacy of client data, and adequate mechanisms for resolving customer issues. Source of funds must be clearly established as halal beyond AMLA regulations. Hidden forms of riba must be curbed. Fees must be transparent and reflect actual costs. In the context of crowdfunding, every member of the crowd must have explicit knowledge and understanding of the project funded with his or her funds, avoiding jahalah and gharar. Next. Islamic finance products often involve multiple agreements and demand a specific sequence which must be executed for them to be Sharia compliant. So there must be a sequence of events that needs to be undertaken to be Sharia compliant. So from a Sharia perspective, it may be debatable whether it is permissible to generate an irrevocable promise and irrevocable debt automatically based on the prior consent to the procedural rules of the P2P platform, which legitimizes the use of smart contracts. So when you have smart contracts, sometimes the sequence doesn't come into play as per what the sequence is actually required under the Islamic contract. So that, I think, is the issue that I think we're going to be confronted with. It's something that I think that can be adjusted accordingly. Next page, please. So an Islamic platform is expected to verify that the fund-seeking business meets the usual Sharia compliance criteria, such as dealing in prohibited activities. Since funding contracts are concluded for a period of time with fixed termination date or open-ended, the platform may not be able to meet such expectations that requires continuous monitoring. These are some of the gaps that I think we need to be able to address. Is it the responsibility of the Islamic investor and not the platform to ensure that the funded enterprise remains Sharia compliant during the whole term of the contract? So effecting any corrective action in case of project turning Sharia non-compliant may entail huge financial loss to the investor. So from the very onset, I think what we're saying that we need to actually put into place the Sharia principles regards to a lot of these things that needs to be undertaken. And I think one of the key things that probably, in summing up, is that I think Islamic FinTech has immense potential as a strategic response to the problem of financial exclusion in the Muslim world. I think I've alluded to that just now. If you look at the context of within the bottom 5 of the member Islamic countries, the kind of financing access is very, very low. The need for actually to have a lot more FinTech, the advent of FinTech will be able to actually increase the level of financial inclusion to some of these countries. Islamic FinTech is a reality in many Muslim countries, with Islamic crowd funds playing a growing role in improving financial access. Islamic FinTech, similarly to its conventional counterpart, requires an enabling legal and regulatory environment. The regulation process should enable and not stifle innovation. I mean, the context of what has been discussed just now in the first presentation about the context of RegTech. Who should own the regulatory, who should formulate RegTech? Should it come from the users or should it come from the regulators? And if it comes from the regulators, then it will actually stifle the context of innovation. So that's something that I think we need to think about. Regulators should develop clear and consistent standards to improve efficiency and safety of digital financial services while underlining the need for Sharia compliance. I think in essence, I think in summing up, I think there should be a movement. I think Omar has alluded to this in his summing up just now. There needs to be a movement, a real passion within the context of IDB member countries and within Islamic countries to actually move this level of FinTech to be one that is adopted and be working in collaboration with regards to a lot of development banks. Because that's the only way that you can actually get financial access. Regulatory concerns will always be there from the context of what regulators would want, and that in a way stifles the growth of development banks. The other part is basically perhaps IDB and OIC also needs to come in and to define its own rules on what AMLA and counter financing terrorism is all about, CFT, AMLA and CFT. You need to come with your own rules, because currently that I think becomes a great challenge with regards to this flow of funds coming into FinTech. If you need to put in your KYC standards, but the KYC standards seems to be in compliance with regards to international standards. So perhaps we should come up with our own definition of what AMLA is all about and how KYC should be adopted within the context of Islamic FinTech. With that, ladies and gentlemen, I'll end my presentation and thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Thank you very much, Dr. Mortarazif. It was a very comprehensive presentation. Our final speaker is Mr. Jamel Bozain, with more than 23 years of experience in the information system domain, as well as in the corporate and commercial field in retail banking. Mr. Jamel Bozain had large-scale projects as a project manager. Committed to the project of Zaytuna Bank's creation, he was responsible for the establishment of bank's strategy and organization, as well as its information system. His specialization includes strategy, digital transformation, project management, information systems, and change management. He holds an engineering degree in computer science from the Faculty of Sciences of Tunis and an MA in banking techniques, ISDB France, and MBA from Paris Dauphine. Please, the floor is yours.
Merci beaucoup. Désolé, je vais parler en français. Donc pour ceux qui ne comprennent pas, je les invite à prendre l'appareil de traduction. Et je ne vais pas tarder, je vais essayer d'être très vite. Je sais que tout le monde a faim, moi-même. Donc je vais essayer de faire rapidement. Je vais essayer, dans ma présentation, de répondre à 2 questions. La première, dans quelle mesure les FinTech impactent les activités des acteurs traditionnels? Et le deuxième, comment les acteurs traditionnels doivent faire plutôt pour se mettre à niveau et ne pas être dépassés. Tout d'abord, je veux rassurer mes confrères banquiers que le digital, ce n'est plus un choix, c'est une obligation. Ceci dit, ma conviction, l'émergence des FinTech n'implique pas forcément le déclin des acteurs traditionnels. Au contraire, ce changement représente une opportunité pour les acteurs qui sauront entreprendre les bonnes actions et tirer des leçons du passé et faire preuve de proactivité dans la gestion du changement. Avant cela, les acteurs traditionnels doivent comprendre comment et dans quelle mesure les FinTech impactent leur activité. Pour répondre à cette question, je vais résumer cette question, plutôt la réponse, en 5 points. Le premier point, c'est la personnalisation de services et produits financiers. Et on constate une progression et on constate aussi une rupture avec le standard ces dernières années de segmenter les clients dans des silos, dans des segments homogènes, etc. Avec les FinTech, ce n'est plus le cas. Maintenant, on personnalise carrément le produit et service par client. Le deuxième point, si dans de nombreux secteurs traditionnels, de nouvelles technologies contribuent au rétrécissement des marges, certains nouveaux marchés connaissent l'effet inverse et voient leur opportunité de développement se multiplier grâce à la création de nouveaux pools de profit. Ce phénomène oblige les acteurs traditionnels à intervenir plus en amont pour servir de nouvelles cibles clientèles, probablement peut-être plus complexes, mais ça sera plus rentable. Le troisième point, les acteurs traditionnels dorénavant utiliseront les termes du nouveau code imposé par les réseaux sociaux. Ainsi, leur offre doit s'adapter aussi aux plateformes de ces nouveaux entrants pour repenser les services financiers et permettre aux clients de prendre le contrôle d'une partie de la chaîne d'approvisionnement, telle que l'aide à la décision jusqu'à l'intermédiation financière. On a déjà commencé, on a vu que maintenant les souscriptions sur Internet, les demandes tickets, les demandes des cartes, tout ça. Donc on externalise une partie de l'activité bancaire aux clients. Ce n'est pas une mauvaise chose d'ailleurs. Le quatrième point, l'intensification de la concurrence va s'accroître. Des acteurs de toute taille pourront tirer parti des nouvelles technologies pour réduire leurs coûts, adresser plus facilement les questions de conformité et se concentrer sur des marchés où ils sauront développer un avantage concurrentiel et compétitif. Et le cinquième point, malgré la multiplication probable des données, des outils d'analyse, la valeur ajoutée de l'humain ne sera pas remise en cause. Les entreprises, alors, devront ajuster leur stratégie de formation et de développement des talents, essentiellement les talents numériques. Ça pour la première question concernant l'impact des FinTech sur l'activité des acteurs traditionnels. La deuxième question que je vais essayer de répondre, comment les acteurs traditionnels doivent faire pour se mettre à niveau. Ce que je vais vous présenter, c'est un modèle qu'on a utilisé, c'est un modèle qui a été expérimenté à Banque Zitouna d'ailleurs, et qui peut être discuté bien entendu, mais il a déjà fait ses preuves. Ce modèle-là, il est basé sur 5 axes. Le premier, c'est le positionnement et proposition de valeur. Le deuxième axe, c'est le modèle de distribution. Le troisième, c'est la technologie et la gestion de données. Le quatrième axe, c'est le modèle opérationnel. Et le cinquième, organisation et culture. Pour le premier axe, positionnement, et juste, je vais revenir sur ce modèle-là. On l'a utilisé tout d'abord pour faire les diagnostics, pour faire la maturité digitale de la banque. Et à partir de là, on a fait des recommandations et des initiatives stratégiques digitales, à partir desquelles on a fait un portefeuille digital qui s'étale sur 3 ans, afin de mettre à niveau et de suivre la mouvance des FinTech et du digital. Le premier axe dont je viens de parler, c'est le positionnement et proposition de valeur. L'entreprise ou la banque se doit être proactive par rapport aux besoins de sa clientèle, même anticiper ses besoins. Pour ce faire, elle doit décloisonner tous les rapports entre les différentes directions tout d'abord, et ensuite créer un écosystème d'acteurs qui favorise l'innovation et l'anticipation du besoin de la clientèle. Nous proposons pour cet axe-là 3 critères. Bien sûr, ces 3 critères ou 4 ou 5 axes, on peut développer 6 axes, 7 axes, mais nous, on a voulu se limiter sur 4 axes, 5 axes et quelques critères dont je peux vous présenter. Mais il y en a d'autres critères dont on n'a pas le temps assez pour développer. Si vous voulez, on peut en discuter tout à l'heure en marge de notre séance. Donc, les 3 critères. Pour l'axe positionnement et proposition de valeur, il y a l'innovation. On parle de l'open innovation. Il est important et primordial de recourir à l'extérieur et s'appuyant sur son écosystème de partenaires, de clients, de fournisseurs. Et là, c'est la complémentarité entre la banque traditionnelle et les FinTech et son environnement, afin de créer ou de développer un terrain fertile pour l'innovation. Le deuxième critère, c'est la conception et design des produits. Ce critère vise à mesurer la capacité de l'entreprise à prototyper ses futurs services de façon à gagner d'une part du temps et bien choisir les projets à lancer. Donc, l'idée de faire des POC, des proof of concept, afin de ne pas aller dans tous les sens et faire tous les projets ou perdre de l'argent pour des projets qui n'ont pas de valeur ajoutée. Donc, l'idée pour ce critère-là, c'est que le prototypage est pour mieux choisir et bien choisir les projets à lancer. Et le troisième critère, c'est le marketing. Et avec le digital, le marketing est vraiment bouleversé dans tous ces modèles de 4P vers des nouveaux modèles et même une forte évolution. Ça pour le premier axe. Le deuxième axe, le modèle de distribution. Le process de distribution et de vente est bouleversé avec le digital. Nous proposons 3 critères là-dessus. Le premier, c'est la distribution sur les canaux digitaux, tels que le web, le portable, les tablettes, etc. Et le développement de ces canaux digitaux est primordial pour atteindre les clients là où ils sont, sans oublier aussi l'apport ou l'utilisation des réseaux sociaux qui peut nous aider à atteindre tous les clients. Le deuxième critère est le canal physique. Le canal physique, c'est un canal, c'est vrai qu'atteindre les clients là où ils sont, c'est bien, mais aussi les bien servir dans les canaux traditionnels ou les canaux physiques est très important. C'est pour cela les canaux physiques ou le canal physique lui-même, il doit être digitalisé à travers des automates, des self-service, etc. Ensuite, le troisième critère, c'est l'interconnectivité entre ces canaux-là, ce qu'on appelle l'omnicanal, ou il y en a pas mal des noms, mais nous on l'appelle omnicanal. Donc l'interconnectivité des canaux, il est important que les canaux communiquent entre elles afin de garantir aux clients le choix tout d'abord et la continuité de la transaction. Il peut la commencer dans un canal et la terminer dans l'autre. Le troisième axe, l'axe de la technologie et gestion des données. La technologie, en aucun cas, pour l'entreprise, ne doit pas être un frein pour l'évolution. Plutôt, la technologie doit être un levier pour l'innovation des domaines stratégiques de l'entreprise, c'est-à-dire un levier des domaines métiers. Nous proposons pour cet axe-là, le troisième axe, 4 critères. Le premier, c'est l'architecture. L'architecture technique, on parle d'architecture technique, qui doit faciliter, qui doit être facile à mettre en place, réactive par rapport aux évolutions technologiques et favorise la mise en place de la stratégie de l'entreprise. Donc, la technologie, c'est un moyen, c'est un levier de mettre en place la stratégie et non pas un frein pour la mise en place de sa stratégie. Le deuxième critère est les outils de productivité. Le matériel, les logiciels, les téléphones, les tablettes, les outils d'aide à la décision, la big data, l'intelligence artificielle, tout ça, ça entre pour aider la machine, pour aider l'outil de productivité à prendre les bonnes décisions et dans les meilleurs délais. Le troisième critère dans la technologie, c'est on a la tendance à oublier un peu ce critère-là, c'est la gestion des projets. La gestion des projets, elle doit être une gestion proactive. Donc les anciens modèles de gestion de projet, à mon sens, doivent être changés vers les nouveaux modèles d'agilité et qui permettent l'implication et favorisent l'implication des parties prenantes, toutes les parties prenantes dans le secteur, et qui donnent un résultat rapidement. Et le quatrième domaine, qui n'est pas le moindre, c'est la sécurité et la continuité de service, qu'il ne faut pas oublier. Lorsqu'on parle de technologie, on parle aussi de sécurité, on parle aussi de continuité de service. Donc il faut mettre en place les dispositifs nécessaires de sécurité et de la continuité de l'activité. Le quatrième axe, le modèle opérationnel. J'ai résumé le modèle opérationnel avec deux critères. La simplicité des process. Les process doivent être bien définis. Elle définit d'une manière claire les rôles de chaque intervenant, ainsi que l'optimisation des process pour la prise de décision afin de gagner du temps et de réponse. Bien entendu, le deuxième critère, c'est essayer d'automatiser les process, rendre, dans la mesure du possible, les process en mode STP ou en mode automatique, afin que la transaction passe de bout en bout en automatique. Et le cinquième critère, organisation et culture. Donc nous proposons 3 critères sur cet axe-là. La gouvernance et la culture. Elle considère les moyens que l'entreprise peut mettre en place de manière pérenne pour arbitrer, animer, piloter l'activité digitale. On parle de l'implication des parties prenantes, les comités et leur composition. Donc c'est la partie gouvernance culture. La partie ressources humaines, l'entreprise doit donner de l'importance aux salariés du numérique, si on peut les appeler comme ça, à la fois pour les attirer et ensuite pour les fidéliser. Et le troisième critère pour l'axe organisation et culture, c'est le management. Ce management-là doit être, cette culture managériale doit être basée sur une culture de transparence, de la responsabilisation et de l'accessibilité à toutes les données, afin d'encourager l'innovation et de permettre à l'ensemble des collaborateurs d'assurer la veille technologique. J'espère que j'ai été très rapide. Merci pour votre attention. Si vous avez des questions.
Thank you very much, Mr. Bozain. We are just on time, really. Can we take a couple of questions if you have any? No. Okay. It seems our lectures were very efficient. They didn't leave any question behind. So what we do now, we would like to invite our lecturers to the stage so that we would like to give them a small memento. can remain on the stage. We can just one last activity event would be related to our very special friend, Datuk Razif. In ATFIMI, we have a tradition of giving honorary membership to persons who have contributed to development finance and to ATFIMI's work. In that respect, Datuk Razif is an excellent example. He has made great contributions to development finance in Malaysia. Also, he has contributed greatly to our activities. I would like to always remember one event when we had in Malaysia. Our chief of guest was Honorable Mahathir Mohamad, and he described us how he transformed Malaysia through changing mindset, which was also mentioned today by several authors. So we would like to take this opportunity to, on Sunday, 2 days ago, we had our General Assembly in Tunis, in this hotel, and our General Assembly has given, has conferred honorary membership on him, and in memoriam, we would like to present him a small memento. So please bring it. On a personal note, I'd like to say that he's one of the best persons I've